Well, if you want to be even more concerned with the state of the U.S. housing market, here's some ammunition for your next debate. Pending home sales. It's a measure of signed contracts on existing homes. They dropped 1.5% in October from September. And if you're wondering what does this mean, that means pending home sales officially hit the lowest level since the National Association of Realtors began tracking this metric way back in 2001. And this means two things. One, this is the worst pending home sales read in 22 years, and ever since data has been collected. And it's even worse than readings during the financial crisis more than a decade ago, around 2008. Now, for those that also don't know, because the index measures signed contracts, it's also the most recent indicator of housing demand. It reflects the buyers who were out shopping in October, which was when the popular 30-year fixed mortgage rate briefly shot above 8%. Now, rates have since pulled back to around 7.3%, according to the recent report from Mortgage News Daily, while realtors continue to say it's not just high rates, but still very low supply of homes for sale. That's deflating the activity. So for those of you confused, this is how I've been able to explain it to other people, mostly my friends. You have solid assets and you have funds, and you want to move from a rental to an owned home with a mortgage. Well, do you really want to buy a home knowing that your mortgage interest rate is at 7.5% on your loan? And if you're a homeowner, you're looking to upsize, downsize, move out, sell your place, sure, that would increase your sale value. But if you own the home for, let's say, 3, 4, 5 years, and you're locked in at a rate of like 2.6%, which is what it was back in 2020, why would you surrender that home to get a new property knowing that that mortgage is going to be 7 to 8%? It makes no sense to sell a home and jump into a new one with a monthly mortgage that will be more than double what you were previously paying. So that paves the way for low supply, some demand, and for the everyday working American, the working class blue collar American who can, how many of them can afford a mortgage with 7 to 8% interest? It's insane. And that's what a lot of my friends are saying as well, that are trying to move out of the city and get into the homes. So yes, in summary, the housing market continues to drop. More hints of how the U.S. economy is faring right now. The real question now is this: what will it take for this trend to turn around? Will the mortgage markets ease up a bit, or will it get only worse? Share your thoughts in the comments below. And for Modern Wall Street, wondering if my friends can even get a house sometime soon, I'm James Sweeney.